Anthony Grasso here, bringing you financial news that you can use. In this series of videos, I'm going to look at stocks to possibly recession-proof your portfolio. In this particular video, I'm going to do a stock analysis on Jabil. Now, is this company worth investing in right now? This electronics manufacturer? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and then I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So this video is brought to you by Webull. It's an online brokerage and trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so the company Jabil, they provide manufacturing services and solutions worldwide. The company operates in two segments: the electronics manufacturing services and diversified manufacturing services. It offers electronics design, production, and product management services. Now, the company provides electronic design services such as application-specific integrated circuit design, firmware development, and rapid prototyping services, and designs plastic and metal enclosures that include the electromechanics, such as the printed circuit board assemblies, the PCBAs they call them. It also specializes in three-dimensional mechanical design, comprising the analysis of electronic, electromechanical, and optical assemblies, as well as offers various industrial design, mechanism development, and tooling management services. In addition, the company provides computer-assisted design services consisting of the PCBA design, as well as a PCBA design validation and verification services, and other consulting services such as the generation of a bill of materials, approved vendor list, assembly equipment configuration for various PCBA designs. Further, it offers product and process validation services such as product system, product safety, regulatory compliance, and reliability tests, as well as manufacturing test solution development services. Additionally, the company provides systems assembly, test, direct order fulfillment, and configure to order services. It serves 5G, wireless and cloud, digital print and retail, industrial and semi-cap networking and storage, automotive and transportation, connected devices, healthcare, packaging, and mobility industries. Now, the company was formerly known as Jabil Circuit and changed its name to Jabil back in 2017 and is headquartered in St. Petersburg, Florida. So let's look at some of the news of the company right now. So back in June, the Jabil announced that they teamed up with SolarEdge to advance smart energy technology. Now, that announcement of teaming up with them, SolarEdge is a global leader in smart energy technology to help change how power is harvested and managed in photovoltaic systems. A shared focus on manufacturing excellence and automation has led to the installation of more than 2.5 million intelligent power inverters and more than 60 million power optimizers in over 130 countries across 5 continents. Also back in June, Jabil announces the results of the global survey of the 5G technology trends, and we'll just briefly go over this. Now, this reinforces continued 5G adoption and a steady pace of deployments despite persistent technology and business-related challenges. The latest poll on the state of the 5G industry complements the results of Jabil's inaugural 2018 5G survey, which revealed varying opinions on the possibilities and potential for telecommunications companies, as well as their customers and partners. Now, the decision makers from North America, Europe, Middle East, and Asia Pacific weighed in on the current and future state of the industry, with the majority, 64%, agreeing that it will take about 1 to 3 years before 5G technology will be adopted widely. Also back in July, so last month, Identity Sensors Biologics partners with Jabil Healthcare to manufacture digital diagnostic platform. Now, Identify Sensors Biologics, it's a pathogen detection platform technology company. It has partnered with Jabil, which is the global manufacturer solutions company, to develop processes to reliable, robust manufacturing of portable devices that rapidly detect a wide range of infections at the molecular level with accuracy that is superior to PCR testing. So this is all really great news for this company. So now let's turn the table and look at some fundamentals of the company right now. The stock is currently trading at $62.38 a share with a market capitalization of $8.6 billion. Now, the company is projected to have about $32.04 billion of revenue for 2022, with earnings of around $954 million. Now, the revenues are projected to increase over the next few years to around $34.3 billion by the end of 2024, with earnings of around $977 million. Now, the company does have high quality earnings, and their earnings have grown significantly by 45% year over year for the past 5 years. Now, earnings are forecast to grow about 2.55% per year. Now let's go ahead and look at some of the key measures of the company. Let's look at its valuation real quick. Now, because Jabil is in the electronic equipment, instruments, and components industry and has positive earnings, the price to earnings growth and the price to earnings ratios are the most appropriate valuation measures. The price to book ratio is excluded since it likely underestimates the company's book value by overlooking hidden assets such as intellectual property. The price to sales ratio is not as meaningful as the PE or the PEG ratio due to the company's positive earnings. Therefore, Jabil seems inexpensive right now with a PEG value of 0.87 times below the industry's median PEG value of 1.79 times, which is supported by a PE ratio of only 10.47 times. That is also way below the industry median of 15.63 times. Now, Jabil is a good value based on its price to earnings ratio of 10 times compared to that of the industry of 15.6 times. Now, if you look at the fair price of Jabil when looking at its future cash flows, for this estimate, we're going to use a discounted cash flow model. So Jabil at $62 a share is trading way below the estimated fair value looking at the discounted cash flow model of $100 or so. Definitely undervalued. Now, looking at the profitability analysis, despite one of the lowest gross margins, the net margin at Jabil is above the industry mean. Now, this means that the company pays out a smaller percentage of its revenues to fixed operating costs than does its peers. Now, Jabil does pay a small dividend, and it pays an annual dividend of 32 cents a share, which at its current stock price produces a yield of only 0.52%. At least it's something, right? This is below both the industry's average and the S&P 500, which is 1.91%. Now, however, a few other companies in this industry even pay a dividend, so it's another plus. Now, looking at the growth of this company, now the earnings growth at Jabil did outpace revenue growth over the trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. However, this result was better than that of the average company in the sector itself, and it's definitely going to have steady, slow growth over the next few years. And finally, let's just examine the financial strength of this company. Now, although it reduced its percentage of debt used in its capital structures this year, Jabil has the debt to total capital ratio of 54.95% and is among the most highly leveraged companies in the industry that it's in. Given that the company's operating profits are 8.45 times greater than the interest payments, there should be little difficulty in repaying its debt. So I'm not too worried about them on the financial side. So what did the analysts say specifically regarding this company? Now, the average target price for Jabil over the next 12 months is about $77.41 a share, with a high estimate of being $82 and a low estimate of $73. Now, they have a strong buy on this company as well. So let's go ahead and look at some of the analyst reports real quick. And I'm going to look at the street ratings first. So The street quant ratings rate this company as a buy. This is driven by multiple strengths, which they believe should have a greater impact than any of the weaknesses and should give investors a better performance opportunity than most of the stocks they cover. Now, the company's strengths, they say, can be seen in multiple of areas such as revenue growth, impressive record of earnings per share growth, compelling growth in net income, attractive valuation levels, and solid stock price performance. They feel that its strengths outweigh its fact that the company shows low profit margins. And then let's go to the Ford Equity Research Report. They currently have a hold recommendation on Jabil. That's a result of their systematic analysis of three basic characteristics they look at. They look at earning strength, relative valuation, recent stock price movements. The company has produced a positive trend in earnings per share over the past 5 quarters. And while recent estimates of the company have remained steady, Jabil has posted better than expected results. Now, based on an operating earnings yield, the company is undervalued when compared to all the other companies that they cover. And they said share price changes over the past year indicates that Jabil will perform in line with the market over the near term. All right, and the last report we're gonna just review real quick is the Cfra report. Now, they have a hold recommendation as well. And they said the company has done a commemorable job navigating around component shortages prompted by tight supply chain conditions. But they believe recent catalysts have been built into the estimates. They think that Jabil is targeting a diversified group of growing end markets: mobility, industrials, and semi-cap, healthcare, and packaging, connected drives, auto, transportation, and 5G wireless and cloud, but would like to see an incremental effort to reshape its product portfolio by scaling back on the lower value work, i.e. they consider low value work, which would be networking storage, to improve the mix and unlock manufacturing efficiencies. You have some good points there. So based on, let me bring it back here. So based on all the information we just received, am I a buy, hold, or sell recommendation on Jabil? Here are my thoughts. Now, the company's manufacturing and design expertise is a competitive advantage for Jabil. They have strong customer relationships and they have growth prospects across a diversified end markets, and definitely in markets that are generally seen as recession proof. Now, the company has levered the end markets that are seeing secular growth, such as sectors as in healthcare. And that the healthcare is definitely one that is generally considered recession proof. Plus, the company itself is undervalued with a P ratio of only 10 times compared to the industry average that it's in of 15 times. So based on all of that information, I am a buy recommendation on Jabil with a 12-month price target of $75 a share. Definitely think this might be the one you might hold in your portfolio. You might want to hold off though on purchasing it right away, because by the next dip, I would say wait till the next dip happens, buy it, and hold it long term. I don't think you'll be surprised. Now, risks to this recommendation though and target price include smaller share gains than projected in the new DMS markets. There could be slower implementation of new contracts than could be expected, and the loss of a top 10 customer. Yeah, a top 10 customer could really damper their revenue projections. So there also could be intensified supply chain disruptions that could adversely hurt the stock or the electronic manufacturing services segment as a whole. Having an inability to source components could have an adverse effect, and it definitely could. But this is kind of like worst case scenario. I'm not too worried about that at this moment of time. So, keep your eyes peeled. So there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.